Ladies and gentlemen, good day and welcome to Mitsu Chem Plast Limited Q4 FY26 earnings conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Thakur from Kirin Advisors. Thank you, and over to you, sir.
Yeah, thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Mitsu Chem Plast Limited. From the management team, we have Mr. Manish Dedia, Managing Director and CFO, and Ms. Kashmiri Dedia, Vice President, Finance and Account. With that now, I hand over the call to Mr. Manish Dedia for the opening remarks. Over to you, sir.
Good afternoon, everyone. It is pleasure to welcome all investors, analysts, and participants to the Mitsu Chem Plast Limited Q4 and FY26 earnings conference call. We sincerely appreciate your continued support and interest in our company. FY26 has been a years of steady progress for Mitsu Chem Plast Limited, marked by consistent operational performance and improving profitability. Revenue growth remained stable, supported by resilient demand across key end-user industries, while margins improved through better product mix, operating leverage, and disciplined cost management. The Furnastra healthcare furniture parts vertical continued to gain traction, emerging as a key growth and margin driver. With rising acceptance across domestic and international markets, our export business remained resilient, now spanning more than 17 countries with depending relationships across pharmaceutical, healthcare, chemicals, and FMCG sectors, reinforcing our position as a reliable long-term manufacturing partner. We also executed capacity addition that have strengthened our production infrastructure for the quarters ahead. Q4 FY26 carried forward this momentum as we sharpened operational capabilities and broadened relationship across domestic and international market. Profitability improved meaningfully, driven by execution, discipline, enhanced efficiency, and a gradual portfolio shift towards higher value-added products. Mitsu Chem Plast operates as an integrated blow and injection molding solution provider across industrial packaging infrastructure, healthcare, and emergency handling equipment. For our Maharashtra facilities, house over 51 blow molding and 22 injection molding machines, with installed capacity exceeding 29,900 metric tons annually. Supported by strong in-house R&D and testing capabilities. Building on this foundation, we are pleased to announce a significant strategic milestone, our entry into the intermediate bulk container vertical, which is called IBC, through a fully automatic IBC plant at our Khalapur facility. A natural extension of our packaging expertise that opens a compelling new revenue stream with a strong domestic and export demand potential. Responsible manufacturing and community impact remain core to who we are as a company. On the sustainability front, we continue advancing initiative around energy efficiency, waste recycling, and water conservation across our facilities. Simultaneously, through the Mitsu Foundation, we remain actively engaged in supporting healthcare programs, nurturing sports, talent, and contributing to broader community welfare, all reflecting our deep commitment to creating lasting value for every stakeholder we serve. As we move ahead, guided by our transformation pillar, Furnastra, packaging products, operational excellence, and data-driven marketing, and reinforced by our IBC foray, we remain confident of progressing toward our long-term objective for achieving rupees 1,000 crore in annual revenue by FY 2028. Before concluding, I would like to thank our employees, customers, business partners, and shareholders for their continued trust and support. With this, I conclude my remark and now request Ms. Kashmira Dedia to take you through the financial performance for the quarter 4 ended March 31, 2026. Thank you.
Thank you, Mr. Manish Dedia, and good afternoon, everyone. I will now take you through the financial highlights for quarter 4 financial year FY 2026. For the fourth quarter of FY26, Mitsu Chem Plast Limited reported steady improvement in performance, supported by better operating efficiency and an improved product mix. Total income for the quarter stood at rupees 8,679.47 lakhs. EBITDA increased to rupees 1,422.74 lakhs, registering growth of 72.98%, with EBITDA margin improving to 16.45%, an expansion of 736.14 basis points compared to the same period of the last year. Net profit for the quarter 4 FY26 stood at rupees 771.73 lakhs, up by 117.90% year-on-year, with net profit margin improving to 8.92%. Earnings per share for the quarter stood at 5.68, higher by 117.62% compared to the corresponding quarter last year. For the full year FY 2026, total income stood at rupees 35084.56 lakhs, reflecting year-on-year growth of 5.40%. EBITDA for the period increased by 48.88% to rupees 3466.31 lakhs, with margin improving to 9.90%, reflecting an expansion of 289 basis points year-on-year. Net profit for the FY26 stood at rupees 1561.87 lakhs, registering a growth of 115.40%, with net profit margin improving to 4.46%. Earnings per share stood at rupees 11.50, up by 113.36% compared to the previous year. This result reflects our continued focus on operational discipline, cost optimization, and product mix improvement, which have collectively contributed to healthier margin despite a competitive business environment. As we look ahead, our priorities remain centered on margin expansion, export growth, and scaling value-added verticals, particularly healthcare, furniture, and furniture, and our strategic foray into the IBC vertical, both of which we believe will be meaningful growth contributors in the coming years. With that, I conclude my financial update. I will now request the moderator to open the floor for question and answer. Thank you.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes, please go ahead.
Yeah, so just wanted to understand the EBITDA margin improvement in fourth quarter. What are the key drivers? I mean, you had mentioned something, but I just wanted to press it deeper, yeah.
From the last third quarter, we are doing a lot of value addition as well as there are a lot of operational efficiency. And somewhat the extra margin has come up from the the war situation which has happened, and somewhat we consider that some little margin came from that war also.
Understood.
So because of that war situation, 1 or 2%.
1 to 2%. Okay.
Yeah.
So what's the sustainable margin one should look at going forward at a company level?
So I think double digit is a, Q3 also was a double digit, and I think we consider that 9 to 10% is fair enough in our business. So 10% I consider.
Mm-hmm. Okay. So 10% is a sustainable margin. So I mean, this quarter it was around 16.5%, right? So it's quite a big difference. So ideally one of the margins would be higher, right? Rather than 1 to 2% that you're mentioning.
Sorry, sir.
So your one-off margin, I mean, the margins because of special situation would be much higher because this quarter is 16.5 as compared to sustainable margin. We are talking about 10%, right?
See, obviously we aim, our internal targets are little more than 10%, but we always say that this 10% should be minimal.
Okay. Understood. And I think our journey or vision towards 1,000 crores that we have outlined, this year also we were expecting some growth, right? But I think growth was quite muted for FY26 also. So how should one look at growth trajectory? I mean, from this 350 crores to 1,000 crores journey that you're talking about. So can you throw some more light how the trajectory would look like?
Yeah. Okay. So I'll take it like this. See, whatever we have said, I think we have achieved till now. The turnover is little okay. I think from last 2 quarters we are seeing the one thing. So first, we really wanted to improve our bottom line, and that's what we are trying to get. So for that, might be we are compromising with our sales which are not profitable. That is number one. So here our major focused on bottom line rather than top line. Number one. Number two, yes, the plans are still on the pipeline, and we are, I'll not say too much delayed, a little delayed, and hence we have started our unit at Tarapur, because this is the reason, we are ready with the infrastructure. Now, as soon as the situations stabilized, you will see the growth again back. And also we have launched IBC machine, which is also one of the growth driver.
Mm-hmm. Okay. So what's the growth we are targeting for this year, FY27?
Much better than this. I think minimum 30% growth this year, minimum.
Okay. And how much is the contribution from this Furnastra healthcare furniture?
So around 16% is our the furniture and infrastructure, and 84% from the packaging items.
Furniture and infra would be about 16% revenue mix, right?
Right.
And the margin profile of Furnastra, how would that be?
So it's a much better 15 plus margin. EBITDA margin is a 15 plus.
Okay. Understood. Fair enough. I think that's very helpful. That would do it from my side. Thank you so much.
Thank you.
Thank you. Before we move to the next question, a reminder to the participants: to ask a question, you may press star and 1. Next question is from the line of Keshav Garg from Counters PMS. Please go ahead.
Sir, I'm trying to understand, firstly, how much has the raw material prices, what is our raw material? Is it PVC or is it PP? Hello.
It is SDP.
HDP. So HDP is
mainly is SDP. Then there are many other materials also.
Okay. But main is HDP.
Yes, sir.
Okay. And how much have HDP prices increased year on year in Q4?
So around 40% has increased. The prices have increased by 40%. in only after war.
And they are still 40% up in first quarter, where we are currently?
No, I think they have reduced quite good. I think now it is must be 30%, something like that.
Okay. And sir, so now I understand that we have a monthly price contract with our customers. Is that understanding correct?
Yes and no, both. So some of the customers, yes, we have a monthly contract. Some of the customers, we have a spot also. In the war situation, we have to have a spot contract because we were also not aware how the pricing will be.
Okay. So now that prices are down, HDPE prices are down quarter on quarter. So are you expecting any reversal of the inventory gain that we made last quarter, in this quarter?
Yeah, obviously. It will be either gain, either loss, because a lot of things are dependent on war situation also. But yes, we remain very calm in this, like we are not too much big speculator that if the war goes, you have to buy extra quantity and then remain the same. So I think we are very moderate with that because we are focusing only on the manufacturing these things. And by grace of God, I think the raw material suppliers are also supporting us. Whether price goes up or goes down, we are supplying it at that reasonably good to us.
So basically, what I am trying to understand is that since the raw material itself is up 30% year on year in FY27, so the 30% revenue growth guidance that you gave for FY27, is it volume growth or is it revenue growth?
I think you are mistaken on some of the part. I've never said year on year. I just said the last war situation had become 40%. And now it is 30%. It is not remain the same. Any situation, if it is a 30 or 35%, there will be a huge problem with India.
Hello.
With the India. And so it cannot be remain 30%. So it will definitely come within 1 or 2 months. It will be normalcy will come up.
Okay, so we are expecting further reduction in raw material price.
Hope so.
Okay, understood. Sir, so for FY27, what is our revenue growth target?
Yeah, I think just now I said we are targeting around 30% growth.
Sir, so that's what I'm asking you. 30% is revenue growth or volume growth?
Both.
Okay, so that means you are expecting...
So, understand, my this revenue growth is also not significant increase because of the rate increase. Okay, so we are till February it was the same amount of the HDPE rate. Even in the next coming year also it will be before war situation rate will come up, and we are talking on the same volume only.
Sir, so just to get clarity, last year FY26 we did around 21,000 tons. Now this year FY27, are we expecting to do somewhere around 27,000 tons?
Yes, sir. We are already coming up with the expansion. Unit 4 we have already started. There also some expansion will come up. Some, as you see, a growth in our operational efficiency, there also we will come up. Our IBC project is also coming up. So definitely there will be a growth.
Sir, and what is the capex for this financial year FY27?
We will announce that very soon.
Okay. And sir, now again, we are going into FBC. So basically, we are expanding capacity. 84% revenue is coming from container only, and FBC is also container. So the FBC margin, is it higher than the current containers that we are making?
I'll correct you. It is not FBC, it is IBC.
Yeah, IBC, I meant that only.
Yeah. Yeah, it is a good margin as many less player in this, and hope that yes, we can get the better margin. Yes, for that.
So basically, IBC margin should be better than the current container, what we are doing in the current container division.
Yes, true.
Okay. And can you quantify that how much exactly the margins you are expecting to be higher?
We will be very early into this, so let us come up. We have just announced this project, and as we said, we will come up with the Q2. So once we come up, we will share a lot of things.
Okay, understood. Now, sir, if we compare, since we are predominantly 84% is container only and Time Technoplast is also container, so they are doing 15% EBITDA margin very stably. So how come our margins firstly are so low as compared to them for the same product, and then how is there so much volatility?
I would not like to comment on any competitor work. Sorry for that.
No, sir, I'm not asking you to comment on Time Technoplast margins. I'm asking you to comment why your margins are lower than your competitor who is in the same product. After all, we compare you with the industry leader only.
I would like to give answer on this. Sorry. We are at as I said, in my all calls I'm saying, we are doing better. You can see all my quarters, we are doing little better on every quarter to quarter. That's what I can say.
Sir, so now this EBITDA that we did around 14 crore in last quarter and around 10 crore in third quarter. Sir, so going forward on a quarterly basis, can we expect EBITDA somewhere between 10 and 14 crore, let's say 12 crore average? Is it sustainable number per quarter?
So I just now the last question I said the 10% is sustainable, very, very sustainable. So minimum 10% will sustain. As of all the quarters we were below 10%, and we will make sure that minimum 10 plus margin should be there. Yes, we will try to achieve more than 10% for sure.
Okay. Sir, one last question. I don't want to repeat the same question, but just for the understanding, sir, you see the raw material prices, if the prices sustain at these levels or let's say increase further, then in which case our revenue will, even if the volume is same, the realization will go up, right? Now, if the realization goes up, then, so basically high raw material prices is good for us because we are talking about operating margin being minimum 10%, right? So the higher the raw material cost, the higher the revenue and the margin will be 10% and vice versa. So if the raw material prices go down, revenue goes down, the margin will still remain 10%.
Yeah, sir, I appreciate your calculations, but as I said again, in this price, India will not sustain for sure. And if any chance the war extend and if this prices remains, yes, then we also will have our turnover and everything will change as per whatever the prices remains.
Sir, what I'm asking is whether operating margin is the right way to look at it or EBITDA per ton is the right way to look at it. Because if the price, raw material price goes, yes, please go on.
EBITDA margin.
EBITDA margin. Okay, understood. And sir, one last thing, sir, can you shed some light on that, whatever hospital bed, this thing we did with the Polish company, what exactly are we supplying? How big can the revenues be?
Yeah, good question. So, see, we have tied with as a global supplier to them. They are world leader. I think they comes in the top 3 companies in the world, and we have tied with the to supply them world over. So I think 3 to 4 designs have already passed, and maybe many more are on the way. So the revenue is big enough, but it will be, this is a capital item. So to say any revenue, it is very difficult. But I can say, however, my 16 or 17% contribution in Furnace will remain the same. That's what I can say for sure. Although we are increasing business in container, this business will remain the same, because this is also expanding.
Sir, and what is the other segment? One is container, one is furniture, and what is the other?
That is an infrastructure product. So we make chairs, tables in there.
Okay, so the margins are highest in furniture, then in infra, then in container. Is that understanding correct?
Almost the same. Furniture and infra is almost the same margin.
Furniture and infra are the same margin. Okay, understood. Thank you very much.
Thank you.
Thank you. Next question is from the line of Ritesh Jha, an individual investor. Please go ahead.
Hello.
Yes, please proceed.
Good afternoon, sir. Yeah. Sir, my first question is that with our 4 units now online, what is our targeted incremental asset turnover for this new capacity?
Sir, sorry, your voice is not. Can you speak little louder?
Okay, sir. So my question is, with our 4 units now online, so what is our targeted incremental asset turnover for this new capacity?
It will be. I honestly speaking, we have not gone away that ratio, because phase manner we are doing. I think Kashmira will be able to tell you exactly.
So sir, more or less we try to keep it as a 4 fixed assets turnover ratio, what you are asking. So by the time all the installed capacity, all the machines will come and we come to the normal capacity utilizations, it will remain more or less same, near to 4 to 5.
Okay. Because our current network average is around 1.70x. So do we expect to surpass this by the time you hit 1,000 crore revenue targeted in FY28?
So can you repeat which ratio you are talking about, current?
I mean, our current network average, the average around all the peers, it is around 1.70x times. So by... Sorry?
It's a 3.7.
So our average turnover ratio is 3.70, fixed assets turnover ratio.
Yes. So I'm asking if we can expect to surpass our current network average, which is around 1.70. So when we will hit our 1,000 crore revenue as we are targeting.
It will be more than 4. It will be more than 4. But I always say that let's the plant start, and then maybe we can have a lot of things on the surface.
Okay. And if our high margin export demands scales slower than expected, so what is our minimum utilization rate required to keep this new capex from diluting our margins?
No, sorry, come again. What is the question, sir?
If our high margin export demands scales slower than expected, so what is our minimum utilization rate that is required to keep this new capex from diluting our current margins?
40%.
What will... Sorry?
40 to 45%.
Okay. And our current ratio is around, ROC is around 16.26, right? So what is our specific internal hurdle rate for your Boisar and Tarapur expansion?
What is our?
Hurdle rate, internal hurdle rate.
One request to you, if you can keep your device little away from your mouth, because when
Okay.
you are speaking, it's coming echoing voice.
Words are getting skipped.
Okay, let me just. Okay. Is my voice little clear now?
Yeah, okay.
Yeah. So I was asking, as our ROCE is 16.26 around, so what is our specific internal hurdle rate for our Boisar and Tarapur expansion?
Hurdle rate.
Can you just explain what you exactly want, sir?
Hurdle rate means what is like a threshold limit? What is our threshold for ROCE for our new project at Boisar and Tarapur?
Okay. So you mean to say from new project, what ROC we are going to maintain?
Yeah, what is what is the threshold limit?
Yeah, so definitely see the IBC project is not a small project. It's a very, very big project. And maybe, as I said, we are coming up with a Q2 lot of information. We will share that time because many things will be clear.
Okay. Okay. And how will you protect your ROCE trajectory if any sudden spike in our polymer inputs cost that delays our EBITDA break-even?
So basically we always try to pass on the rates whenever there is an increase or there is a decrease. Maybe there will be a small time gap.
Okay. Okay, okay. Fine. Just let me get back into the queue again. Thank you.
Yes.
Sure.
Thank you. Next question is from the line of Saurabh Patwa from Quest Investment Management. Please go ahead.
Hope I'm audible.
Yes.
Hello. Yes, so thanks a lot for taking my question, sir. So just wanted to get some sense from you on, you have a long-term target of aspirational target of reaching close to 1,000 crores of revenue. So can you just throw some light on how do you plan, like when you reach that, what are the things which you will need to build in during this process? At the 1,000 crores, what kind of revenue breakup you would have in terms of the hospital furniture business as well as packaging? What is the trajectory you think, and what can be the risk, and what is the risk you think you would foresee during the journey?
Okay. Great. So currently, I mean, like, see, we are in Mitsu, we are adding more customer for a better profitability and better visibility. So this year we have added more than 175 customers in last year for better margins, better profitability, because we have to, always go for better margin and better practice. Now, coming back to your question that what will be the share of, so 1,000 crore when we are saying, minimal is like, we are thinking for 20% as whatever the growth plan what we have discussed. So I think a hospital and infra will be around 20% out of that. 15 to 20% will be minimal of this, and the rest will be container and packaging items.
Okay. So that means that this hospital furniture business has to grow, hospital infra business has to grow almost 7-8x from what it is currently.
Yes, we are already exporting many of the countries, and now export hasn't yet started like on a peak.
Okay. And what are your manufacturing capabilities for that business? Will you need a lot of investment there to reach that levels?
No, so we are capable enough to supply whatever the things. We have a good capacity. And obviously we are also expanding because our packaging line is also getting expanded. So definitely there will be expansion for sure. But we are quite know what we will require in future terms. So we are ready with the infrastructure. So right now we are ready with all the infrastructure like building, land building, everything.
Okay. And this would be suffice enough to reach what kind of revenue, sir, and that's when you would need more investment?
Yes, sir.
So you're saying that this will be able to reach by 1,000 crores with this kind of capacity, or you need to do CapEx for that?
We will require CapEx for sure.
Yeah. So what is the kind of CapEx you would require, sir?
Good question. So we will definitely announce step by step. So every year we are coming, I mean, you can see quarter to quarter we are announcing many of the things. This also will be announced very well.
Okay, sir. And so just one more question on this. How the manufacturing process would be different from these two businesses, sir? As in, like, are the capacities fungible depending on the demand which you have, or any approvals which you would require for the growth of this furniture business? Because you already tied up with one of the larger players globally whom you have started exporting. Can you just throw some light which will help us to understand this business more and better?
Yeah. So, like, there's a vast difference between these two. The raw material, from the start with the raw material, the process, the laborious work, and lot of assembly and everything required. It's a huge laborious work and a huge assembly required in that. And definitely, some countries take 6 months, some countries take 1 year to, approve the samples.
Okay. So these are done by the local government approvals, or since you are supplying through your one of the larger global players, the approvals are taken by them, or is it like plant level approvals are required?
So generally we are only supplying a parts. So generally approval has been taken by our customer in India and internationally, both. But we have to adhere their norms. So, every company has a different norms. Every country has a different norms. So, I think we have to adhere their rules and regulations, and we have to supply accordingly.
Okay. Great, sir. Great. Thanks a lot, sir, and all the best.
Thank you, sir.
Thank you. Participants, to join the question queue, you may press star and 1. Next question is from the line of Rohit Suresh from Samatva Investments. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So my first question is on the IBC part that you announced. So by when will we have the plant ready?
Sir, you need to repeat the question. I'm sorry, your voice got
No, I'm asking on the IBC plant. By what is the timeline, like by when do you expect it to be fully functional and ready for?
We have already announced that Q2 we will start.
Okay, Q2. And so in terms of volumes, sorry, I missed it. How big will the plant be in terms of volumes?
Did not understand.
Capacity.
Volume is what?
The capacity of IBC capacity.
Sir, we will be very soon. We will announce a lot of things. See, the project itself is a very, very big project. Let us come up with that project. I think that's a really good project, definitely, and good revenues also. And fine, we will share, I think, many of the things. Once by Q2 we will announce in detail.
Okay. So just one clarification on the EBITDA margins. Is it fair to assume the higher margins in this quarter was due to the raw material pricing benefit that we had?
So both, it was a mix of the things, and even somewhat part is yes.
Okay. Okay, sir. Thank you so much.
So as soon as this benefit has been come up the same way, it will be reversed also sometime. Let's see how the situation goes on.
Understood, sir. Thank you so much. Thank you.
Thank you.
Thank you. Next question is from the line of Akhil Parekh from 360 ONE Capital. Please proceed.
Yeah, hi, sir. Just two questions from my end. One is our guidance of 30% growth for next year, FY27. Is it based on any order book visibility, or is it's more of an aspiration at this point in time? That's my first question.
Sir, need to repeat, sir.
I'm saying the 30% growth guidance for FY27, do we have an order visibility for that kind of a growth, or is it more of an internal target or aspiration at this point of the time?
Yeah, because see, as you know that in the blow molding company, most of the things like it is never more than order book for more than 1 month. So definitely it is a planning only, and as we have a number of customers with us and number of historical data with us, on that basis only we assume that.
Got it. And 30% growth means 450 crore roughly revenue for next year, which implies roughly around 110 crore of quarterly revenue run rate. So we expect that to start from 1Q itself, or it will be more towards the second half of the year? Second half?
Second, yes.
Got it. That's all from my side, and best luck for coming quarters.
Thank you.
Thank you. Next question is from the line of Sakshi Sindhe from Shah Consultancy Limited. Please proceed.
Yeah, hello, good day, sir. Firstly, very congratulations for a good set of numbers. So, I have a few questions. How should we think about the revenue bridge from here to 1,000 crore target by FY28 or let's say 29 specifically? And what proportion of that growth is volume driven versus realization led? And as you scale IBC and Furnistra alongside your core segments?
Thank you very much for your conversation, number one. Number two, I think you asked me what are if you can repeat that question, second and third. I'm like, sorry, your both questions, if you can say one more time.
Yeah, sir. So the thing is, I just wanted to understand that specifically what proportion of the growth is will be volume driven versus realization led. And as you scale the divisions like Furnistra and IBC alongside your core segments.
No, so you mean to say the turnover versus EBITDA margin?
Yes, sir.
Yeah, as I said in my talk, so see, when we are growing, so definitely it will be 10 plus. So it's not like 10%. So higher the turnover, we will definitely have a better margin for sure. Right now, our focus from last 1 year, our focus is on a better profitability only, and that's what we are doing. So turnover, yes, we will definitely. We have a good plans which we are executing little slowly, as we do not want to compromise our margins. I can just haphazardly just say all these things and can do that, and then the margin sacrifice which we do not want. Hence, we are doing little cautious and slowly. So to remain our margin, because I believe we want to be a sustain in the margin. That's very important.
Yeah, that we can see, sir, as even though revenue is a slight cut, you have maintained the margins and it is up. And also I just want to understand how does the mix evolution alter the blended realization? And within that, are there any segments where you are consciously trading volume for margin or vice versa?
So we have 3 verticals, as one is packaging, the second one is hospital furniture and others, where we have infra. So furniture and others will remain. The last year was a 16%. and other was 84%. As by growing, the projections is something like 20/80 ratio. So 20% of our furniture and other parts, and about the containers will remain around 80%, packaging and containers.
Good to hear, sir. I think that's it from my side. Looking forward to Q1 conference.
Thank you. Thank you, ma'am.
Thank you. Participant, to ask a question, you may press star and one. As there are no further questions from the participants, I now hand the conference over to Mr. Karan Thakur from Kirin Advisors for his closing remarks. Over to you, sir.
Thank you everyone for joining the conference call of Mitsu Chem Plast Limited. If you have any further queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Thank you so much, sir. On behalf of Kirin Advisors, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.